staring at me saying, wow. Unforgettable, like that King Cole. Gucci berry wine, I'm singing to you. A one-man show.
What up, boys? We are starting the trading boot camp. We got our boys right here. We're going to turn them profitable. They've traded for a while. Introduce yourselves. Let them know what's going on.
I'm Ethan. I'm 19, bro. Just know a little bit about trading. Hopped on with the boys. I'm just ready to do this.
Yes, sir. How long have you been trading for?
Practice about 3 months, but really hopped on the combines probably 2.5. So been pushing it.
And we're gonna turn them profitable. Just watch, boys.
Man, what's up, y'all? My name's Tyson Olivas. I'm 20 years old. I've been trading for about a month now, trying to see what happens, get this shit started.
Yes, sir.
Awesome.
Yes, sir.
So we're going to go over multiple things. This episode, we're just going to be doing foundation work. So confluences, entries, when to buy, when to sell, everything about the basics. And then the next series, we're going to do more, turn them profitable, getting them payouts, seeing how many payouts we can get in 1 month. We got so much planned. So we'll see you there. Let's go to the charts and let's go over the confluences.
All right, boys. What up?
So we're going to be going over just the basic confluences. We have a confluence toolbox that we're going to go over. This is what I started trading with, 2 years ago. And these are the exact things I just studied up on. So everything that's in there, just know it. When you go to the charts, you can mark out every single thing. And when you back test, sometimes you're going to take trades when you back test, but sometimes you just need to go there and mark everything out.
Yeah, exactly.
Let's go to...
We'll throw trading view up.
Yeah, toss up trading view. And we got to toss up Google Dollars. So let's just go over confluences real quick. But you boys are saying your biggest thing is just entries right now? Okay, so is your bias pretty good when you're back testing? Pretty good. Okay, so back testing, we just need to work on entries. I mean, that's all about confluences. So confluences not only help you with bias, but also helps with entry. You have high draws and liquidity for bias, and you have previous day highs, previous day lows, that sort of thing. But the best thing for entries is, the fair value gaps, the IF cheese, the breaker blocks. So that's what this is right here. So you got buy side liquidity, sell side liquidity. You guys obviously know what this is.
Yep.
Okay. So that can be, pretty much anything, any high, any low. Low resistance liquidity, previous day high, previous day low, like we just talked about. Now what I would do, which helped me a lot, is I would go in order, memorize it, and I'll just read it out loud 5 times, and then I'll try to memorize all of them in order. Just because what that does is it solidifies in your brain and makes you always think about those things. And if you're always thinking about it, then you'll always remember. But time frame, which you guys know what time frame is, but something I just showed you, fast way to switch, it's just by putting the number. And then dojis, do you know what that is? You don't? Okay, so let's go over dojis real quick. Yeah, so you have, this right here is the biggest doji right here. So what it is when the body of the candle goes big one direction, big another direction, and then ends up being right where it started. So, candle started right here, went way up, went way down, and then ended right next to where it started. And what that usually means is reversal. So we were in an uptrend. We had this giant doji, and now we're continuing down. Right here, we're going down, dropping down, doji, sweep, go up, and fill this ginormous 5-minute fair value gap. Alright, so we go up, mark out this fair value gap, we'll go down into it, we come back up, then we continue straight down, we have a doji of reversal, and then we run up 100.
These are terrible market conditions.
Yeah,
this is just pure consolidation.
Yeah, it is. But it shows you that the doji, reverse. I think actually, but even right here, we're going down a little bit. We don't really have much. We sweep this giant doji. We come all the way back up, fill this entire 5-minute fair value gap right here. We even wick out of it, but we doji to the downside. So when someone says doji to the downside, it means the majority of the doji wick is, like, the large part of it is either on the upside if it's a doji to the downside. I feel like I'm explaining this fast. But you have the main wick right here, which is 91 points. And then since it does it like that, that means it does not want to go any higher. It goes all the way up, comes back down. It wants to continue selling off, and that's what it does. It dumps.
There's no buying power as well. Like the buyers don't want to step in right here.
Exactly. They tried to, and it got rejected. So
it didn't hold.
Yeah, it did not hold. They wanted to buy, they wanted to go long, and it didn't hold. So now we went down. Now, if this doji was upside down and this wick went all the way down here, I guarantee it's going to continue down. When we talk about doji, you don't really want to pay attention to the 1 minute. They are important here and there, But the higher time frame doji, the better.
Yeah.
So if we go to the 30-minute, we see
And
the
dojis really aren't that important.
They're not, but they're definitely something to look at.
Yeah.
For entries, at least.
I mean, you'll have it in your like itinerary, I guess.
Yeah.
So you need to know about it, but they're not that important.
Yeah. But they are in a lot of places where you see, I mean, right here.
And show
We
right
go
up.
down, we go down, the doji sweeps it barely. We continue on. Look at this doji. It's a pancake doji. So these are called pancakes when they're super flat. We come up, this doji sweeps this right here. We continue down, and we have a new day or new week opening again. New week opening now.
All right, we need our next confluence.
Yeah, we do. Okay.
Fair value gap.
All right. Fair value gap, so we're going to have to mark that out right here. You saw that?
Yep.
So I like to use the box. You can mark it out however you want. I like to use the box, and then depending on what time frame, I'll have different colors. So like the 30-minute will be a blue. Fair value gap, you can also do writing in here if you double click on the box, and then you go to text, and you can put fair value gap right here. Yeah, so you can just put it right here in the box. Have different colors, but we come down, we tap into it multiple times, which is typically not a good sign when we tap into it 5 times. And then we eventually turn into an iFood.
ICT concepts are slowly going extinct.
They are.
Like they're losing their power every day that goes on.
Well, especially with the war right now. So the thing with the market is you always have to adapt. You can't just have one thing that works all the time and expect it to always work.
Yeah.
Another thing to pay attention to is a order block. So what that looks like is you go right here, and then you have another fair value gap right here. So they interlock right here. So this part, let me grab the marker. So this right here is a high draw. So if we went into this, I would definitely want to click sell. So if we had a candle right here go up into this, I'm clicking sell once we enter this, or these two fair value gaps are sell. And then we continue down, but we're going to top it here. I want you guys to mark out a few fair value gaps as well.
I want you to mark out a fair value gap that gets respected and a fair value gap that gets disrespected.
Right here.
Mm-hmm.
What?
Will just be a fair value gap right here.
No.
Not at all.
So what a fair value gap is, number one, is it's a 3 candlestick sequence where there's a gap between the wicks. So you have the first wick and then you have the third wick, and that gap on the middle candle is a fair value gap.
Right.
But you have one right here.
And now, look at that fair value.
I know I have.
Okay, so yeah, here's an example of it getting respected. We tap into it and then we have selling power out.
And then we disrespect it at all.
Yeah. But just a small trade would be entering right there. Exactly. Actually, a main strategy that people use in ICT is what they'll do is see this right here. We tap into it, but just because we tapped into it doesn't mean nothing or doesn't mean anything. But since we had a red candle coming out of it, that's confirmation to continue lower. So what they would do, so enter right here. I mean, this is a super small trade. They'll put, enter right here. It's not so weird. Put stops above this fair value gap that is right here, and then put TP at a draw liquidity right here. So we'll just go right here, and it's a super small trade, but this is something you could have done. Enter once this 5-minute candle ends out of it, and take a 1 to 2 RR. So all right, you can mark one out now. So mark one out that looks like that. And another thing too, and a lot of traders talk about this, is there's a point where you just understand the market just by looking at it. Like you don't even mark stuff out, you just feel the way the market is, and that's just from purely you go into the charts when the charts are live and you just watch it for a few hours.
Yeah.
You don't take any trades, you don't stress out about missing out on trades because you're not trading at all. You're just watching how the market reacts. Right here, we have 3 candlestick sequence.
Okay.
1, 2, 3. But now we also have 1, 2, 3. So there's 3 fair value gaps right here.
Oh.
And typically on something like this, the lower the fair value gap, the more power it holds. So this one up here, number one, it's smaller. And it gets, so this is an IFEG. We go completely through it and disrespect it. But the reason we do that is to fully fill this fair value gap right here.
And on the 15-minute, that's a super, super bullish candle.
Yeah, this is a bullish candle on the 15-minute time frame. Here, let's So look at that. We tapped into, so not only is it a 5-minute fair value gap, but it's a 15-minute.
Okay.
So let's just remove this line right here. So the 15-minute is just a little lower. It's right here because you see this wick where it goes down to. So that's what you pay attention to is the wicks. And it starts at this wick right here. Do you see that green wick?
Yes, I do.
And then we fully fill it, and then we respect it and continue on. And we continue.
But we just consolidate. So I would look for
Yeah.
3 candle confirmation out of it. And then right here, I'd be like, oh, it's consolidating. I'm not going to trade this.
Exactly. So try to find a fair value gap, and not only a fair value gap, but then one that a candle goes into it and then wants to go back out of it from where it came.
Wouldn't this be one right here then? Fair value gap or
Yeah, but there's a way better one.
a way better one?
Yeah,
Right
Red.
here?
red.
There's 3 red. Okay, correct.
Right
Right
there.
there.
Yep.
So now mark it out. So get the box right here. Yep. You see this tiny little wick right here?
Yes.
You want to?
Like
Yeah. So
right
that's
there.
the top. That's the top, and then this wick is the bottom.
there? Okay.
up
Oh,
lower.
that makes more sense. Okay.
And then see how? Okay.
It tapped in, but it respected the down.
Exactly.
Yeah.
So now we tap in right here, and then we continue down.
So if you see this, there's a fair value gap right here. There's a fair value gap right here. You don't know which one it's going to respect. Grab this volume tool right here.
Yeah. Do you see that?
Fixed volume range. Grab it. Go to the top of this candle, the top of the move, because this is a fair value gap. This is a fair value gap.
Yeah.
You don't know which one it's going to respect. Grab it. Boom. All the volume is right here. So it's most likely to come to this one and not this one. Or else the volume would be up here.
If the volume was up here, then it most likely would have disrespected this, or
Came
it had
to
a
this
tall wick, came to this one, and then went down.
Yeah.
Let's put that on the Google Doc, actually, that tool. Got it. All right, you got this.
All right, right here. So I think I would take right. Wait, where'd you find that?
Right, yeah, right
right
there. Okay, so volume is low.
Right here, so I can take volume right here.
It's got to be with the 3
The 3, yeah.
handles, and the wicks need to leave a range in the middle and imbalance.
I just want to show something real quick. So we just delete this. If you look at this fair value gap right here, so you're right on one, but this, slowing this a bit. So what we ended up having is we tapped into it, but we wicked out of it, which is typically a good sign of inversing it.
Yeah.
When the wick comes above the fair value gap.
So it's now an IFVG. It's an
So-
inverse fair value gap. So basically what that means is price wants to push whatever direction it disrespected it.
If it wicks above it, it could go down. It's not an IFVG yet. It's an IFVG when this green
Full
candle
body close.
closes above the top of it. So this right here now turns into an IFVG. And then we go up a little bit, we come back down into the IFVG, we continue up, we tap into this tiny fair value gap, we go down. This is a lot of consolidation, so it's not the best. But something to pay attention to is when you have a fair value gap and you see it wick out of it and also not have strong selling power, like this should have only came to right here and then ended up down here. But we didn't have strong selling power and we wicked above it, so you don't take shorts on this candle.
Yeah.
You just wait for entry. And we've never really gotten entry. But yeah. All right, you're good.
Fire right here.
Right there.
Perfect.
So yeah, it taps in,
Yes, it does.
but respects.
And it continues lower. So now check the check that tool. Yep. Volume tool. Now just go from right here.
Okay.
Yep. And then go to like right here. Okay, volume's right. You
Really
have
low,
it. You
really
have
low.
it low. Yes. And that's what we pretty much did. We didn't really go above this bottom fair value gap. We did wick out of it, but
Fair value gaps is dealt with. Do you guys understand this concept? Phil?
I'm getting.
I'm still
so
trying to grab
right
cards
here.
here.
We're going to go over to gold, and we're going to see if you guys remember and if you guys can apply the strategy I taught you guys. Mark out a beautiful trade with the strategy I taught you guys just the other week.
we can do that.
Right.
Simple, light.
So hold on, to do this, because it's Asia session only.
It only is.
So what we're gonna do is we're gonna go over to indicators, and I'm gonna say this indicator for you. And it's called ICT,
Kill zones.
kill zones, and pivots. I'm gonna just star it for you. Got it. There. So now it's just in your favorites. But now you got Asia session, London session. So here's Asia session right here.
All right, boys.
Do you remember the strategy?
Can you take a banger trade?
Real quick, boys. Word up. You still lost.
Wouldn't this be more one right here, but then I just got disrespected because I went through it?
Yeah.
All right, so what is the strategy I taught you guys?
Taught us fair value.
Yeah, you didn't how to go through fair value gaps.
What do you think about that? Look, so obviously, boom, 1, 2, 3, disrespected, and then you get a little bit of news candle, right?
Mm-hmm.
Because that's a big fucking okay.
It's the highest whip.
So
Agent
disrespected,
high.
and then boom, 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 boom.
So I'm gonna show you real quick.
Yep.
There's no fair value gap right here. I'm just gonna be blunt. I'm gonna
No,
be
yeah,
straightforward.
that's what I want to hear.
No fair value gap. If I was in this session,
Be done.
I'm gonna change this real quick just so it makes my life easier real quick. So Asia actually opens right here. So this kills doesn't mark it out completely well. So when I'm in the trades or when I'm just watching the market, I'm marking out every single fair value gap. So that's 1. That's 2 right there. None of these are getting taken. None of them got respected.
And something I want to point out.
So I wouldn't have even traded this at all,
Yeah.
actually.
And something I want to point out is you never take a trade off of one confluence. If you have a fair value gap and a drawn liquidity, you don't take a trade. You need to have multiple things. So if you have a fair value gap, but then you also go to the 15-minute and the 30-minute and you have more fair value gaps and they're all stacked on top of each other and we respect that. And then say we also have previous session highs and we have selling power out of the fair value gap, that's when you take the trade. You need to have, and also a broke structure to the downside or the upside. So you want to stack as many as possible. The more you stack up, the better your trade, the higher the probability of trading.
Yeah.
And that's like the toolbox. Like the more tools you have, the better the trader.
Right here.
And even, an A+ setup can't even fail. And that's just trade. No. Think farther. Think farther back. No. That is one. Yes, right there. So mark that fully out.
Okay.
Yeah, and then you gotta make so one right there, and then raise the top. Up to that. Up, down.
Down.
It's just to the
That
right.
way.
Oh, the wick.
Yeah,
Oh,
yeah,
okay.
just the wick.
Oh.
So now bring that fair value gap over so we can see it. Well, we have strong displacement. We didn't wick above it. Then we have selling power out of it. So then you take a trade, even I would have personally. I like to not scalp, but what I like to do is take a trade before even everyone else enters. That's my trading style. So what I would have done is even just seeing this big red candle, even though it didn't go out of the fair value gap. Now it's controversial, but what I would have done is I would have placed stops at the top of the fair value gap, and I would have placed TP. Most people think down here, but no, because why no? So why?
It's because there's a pool of liquidity right there.
And there's a fair value gap right here protecting it. So what I would have done is just put TP at the start of this fair value gap. I don't know why it's small.
Locking.
Yeah. We have strong selling power. We have a clear target. Unfilled fair value gaps. So this is called unfilled. It didn't get filled until obviously this candle. But this is just, this for me is a solid trade. This is pretty much a A+ setup. We have selling power out of it. Enter right here on the next 5-minute, and it's a 1 to 1.75 RR. So it's a pretty small trade, but I like the trade a lot. And yeah, that would have been my trade right there. So the reasoning for all this, we have selling power out of the fair value gap. I don't know why I keep saying powder. And we don't want to target these draws down here because we have a 5-minute protecting it. I want both of you guys to mark out 3 more fair value gaps with the bottom and the top exactly where it should be, and then we'll move on to the next. So let's mark out 3 fair value gaps. It doesn't matter if it gets respected or filled. I just want to see 3 fair value gaps marked out. There's one right there in this place. This is an IFEG. So
At the top of the wick there,
yeah.
all the way down here.
No. Where's the 3 candles? It's only 3 candles. No other candles matter for marking it out. Right? Down more. Right there. So you have candle 1, this green one, candle 2, and then you have candle 3. eventually we're not going to get into this, probably not even in this episode or this series, but another thing to pay attention to is for the 3 candles, how does the last candle look? So on a fair value gap to the downside, what does the last candle look like? This one is to me, it's a telltale that it is going to inverse because there's not a lot of selling power on the last candle.
Yeah.
We didn't doji, but we just tried to sell more, and then we wanted to continue buying. And we inversed it, continued high. So if we have, for example, just this fair value gap right here, we have the last candle is very strong, and then it continued a little lower. We go up, tap into it, continue. So fair value gaps are in play a lot. It's just the way you use them matters a lot with if you're trading or selling.
I was looking at this, but I thought I was gonna mark it right here.
Yeah.
Would
And
that
that's
have been correct?
well,
That's also correct.
That's also
but
correct.
on the 15-minute time frame,
What
that
does it look
whole
like?
couple of candles is just pure bearish.
yeah, that's all gonna be one big.
That's
fair
gonna
value.
be that's gonna be a 15-minute fair value.
Yeah, exactly.
All right.
Up more. Yeah, down. Right on. Yeah. And then how low?
The top of this quick, right?
No, top of yeah,
There you
right
go.
there. Exactly. Solid.
Beauty play.
Solid. All right. Perfect. Go into it, respect it. So awesome. All right. You want to try?
These sticks.
Does that make more sense?
It's literally, yeah, as soon as I put in, or as soon as you made me do it a couple of times,
And yeah.
it's still, it's a little harder to read, but I'm
Yeah.
also getting under the wicks.
Exactly, yeah. And we can't do all the back testing on this series.
You're
but we can do it.
sitting at an absolute beauty example right now. It's a little bit to the left. It's out of frame, but that's where it respects it.
Right here, from this big one, right?
Right there. Mark it out.
Yep.
Yep. Where's the bottom of it?
Lower.
Yeah.
Right. Up more. So now there's 3 candles. There's a red candle, there's a green candle, and then there's another red candle.
Okay.
So try to find out where the bottom and the top is.
Lower.
Right there.
Right there.
Yeah, that's the
Okay,
top.
so
That's the top.
Now
That's the bottom.
move it over. So right here, move this over, so you can see right there. Okay.
Oh,
All right. So now you're very close, but you want to be pretty exact with where this is, just because it could barely tap into it. Right there, and then right there.
I don't even
So
the top.
yeah,
and
the top of this red, top of the wake. You come into it, barely tap into it.
Respect. Come back. Tap in. Respect.
That's like retesting right there.
Yeah, multiple
Oh,
times.
oh,
Absolutely. Bang, 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 and then we disrespect.
Then we
it.
disrespect.
And then it's, yeah,
This candle right here disrespected it.
Yeah, but there's a lot that's not even in play anymore because that's 4 hours later.
Yeah.
That it does.
Yes,
to it.
exactly. You're only paying attention, honestly, to the first time it taps it, buy out. Up to it. So. All right. Another example.
this time.
This be
Yeah,
I don't want you to give me the.
No, you're going too far. So I'll go right there, and I'll find the bottom of the third value. It's only the third candle. A little more down. Not that candle. Right there. Right there. Once you start marking them out, you're like, holy, fair value gap, fair value gap, fair value gap, fair value gap. You just
Yeah.
see them everywhere.
okay.
Tap into it, go up a little bit, inverse it. Right here, fair value gap. I mean, they're absolutely everywhere, and the best thing you can do is once you start seeing them, then you can go, all right, fair value gap, market's live. This candle's moving up towards this. I go to the 15-minute, I see this right here is a fair value gap, so I want to see it reach into those, and then bang. But yeah,
Mark a fair value gap out real quick. I see 100.
180
Perfect. Where's the bottom of it?
would be a little bit more.
Right there. Perfect. Perfect.
Taps in, respects it.
Oh, I see.
And then it retests again.
Respects it right there.
Yep. You see?
Yeah.
So why does price not want to hold and continue to go higher right here? Given it is a very long, every candle is 5 minutes. So when we come through and, we tap in here, great. We go up a tiny bit. Not enough confirmation for me.
Okay.
Come back, retest. Right here, We literally barely wicked out of it right at the bottom of this. Wicked out, I'm like, okay, probably not going to hold. And then I'm looking, all right, I'm like, okay, this isn't going to hold. Let me look for other things. Well, there's another 5-minute fair value gap right here. Doesn't also get respected.
Because that one goes through, right?
Yeah, we're just blowing through it. Doesn't matter. I see that happen. Delete it from the chart. It doesn't matter.
It's honestly, I feel like it's a lot harder too when you're watching on live market.
Mm-hmm. Oh, it is.
You don't know where it's gonna fucking go.
Exactly. That's why you wait.
That's why.
Here's another bullish fair value gap. But we still haven't broken structure. If we wanted to break excuse me. If we wanted to break structure, we'd have to close above this high right here. And then if we close out here and then we have a low right here, then we're going to continue higher, but we didn't. So we're in a downtrend. I'm not trying to take longs at all. So I'm only looking for bearish or selling fair value gaps.
Yeah.
So I'll go back to the 5-minute. Yeah, I'm looking for selling because we've been in the downtrend. There's no break of structure. There's nothing. So what am I looking for? Boom, perfect example right here. Very good. Tops in just a little bit. Respects it. Probably hopping in shorts right here. That's actually such a fat move right there. 100 points on gold for one contract, bro. That's 10 racks. Right here, uptrend. I'm only looking for bullish fair value gaps since we've been in the uptrend for 5 days. At like minimum. So let's see. Fair value gap, fair value gap, fair value gap. There's so many.
And you just like, you don't even need a mark about it. You can just see, it's like,
I mean,
I see the block, well, eventually, you know.
Boom,
You can
boom.
just see the
Fair value gap, tapped in, pushed higher.
Yeah. I wanted to mark that one out. So he just said right here in New York lunch, if you look at New York lunch, there's a fair value gap that we tapped into that made us go higher. Can you mark out that fair value gap on this orange box? So where's the fair value gap? Okay, this is also a hard thing because something we also haven't gone over yet, which isn't a big deal when it comes to confluences, but this right here, let me just show you real quick. This right here is called a devil's mark. So there's no bottom. So when there's no bottom wick, what counts is just the bottom of the bottom.
Okay.
So that means there was no selling power on this candle because it never went below where the candle started.
Okay.
So right here is the fair value gap, and we had a devil's mark. So you just have to put the top right here, and then this red candle right here taps into it, which also makes it so there's no fair value gap on this green candle, and we go higher. So, and other thing too is, you know, we're ending out of a session, going into a new session.
Would this be another fair value gap right here?
Yes,
Yeah.
it will be.
Making sure.
That's great. Actually, you should mark that up. So you tapped into it multiple times and then had good displacement.
Like that?
No, a little higher.
Wouldn't it just be a little up?
Yeah, so grab the.
Oh,
So another thing too is you want to bring your box on the other side so you can see it fully.
okay.
Let me just zoom into this. Bottom of fair value gap
Red.
is this red.
Yeah.
Top of the red. And then our third candle, yeah, this is the first one because this is the bottom. First candle, second candle, this is our third candle.
Top or
So the top
bottom
of
of
the
that.
bottom.
Bottom,
Yeah.
right
Oh,
there.
it's 3. Okay.
3 candlestick sequence. That's all it
Three
is.
candles.
So then these candles tap into it, respect it. We don't wick out of it. We don't fully close below it, and then sell
It's up.
or buy power. Yeah, out of it.
All right, mark some of these out, Ethan.
But yeah, mark out the ones you just marked up, just so you can get a feel for it.
It's right here.
Where's the bottom and where's the top?
Boom.
Right there. Good.
Beauty.
Boom.
Absolute beauty work.
Okay.
You're doing
Yep.
beauty
Beauty.
work.
That's exactly how you want to work.
Right.
Okay. Let's move
It's
this.
so-
Oh, not sure at that point.
That's tiny.
It's tiny.
Tiny.
But I
Wait.
just want to see. I want to see him mark this out, just because it is small, and I want to see where's the
It
top.
does happen, so
Top would be at.
nope.
Oh, you're there.
Right there.
Right there. Bang.
Oh, I couldn't
1, 2,
see
3.
that.
Yep.
It was gone.
Because this third one right here is a doji, which is
Yeah.
the opposite doji. So we have a lot of selling power, but then it doesn't want to sell. Comes up dojis, bang.
So you always have to keep in mind the higher time frame is always going to hold higher power. So when you see those 3 5-minute candles, that
All
makes up
wicked
the
out.
15.
Yeah.
And you're like, okay, what's going on here? What's going on? Why is it doing it? And then you go to the 15-minute time frame and you're like, okay, there's a fair value gap right there. We perfectly wick into it, perfectly respect it. Well, the 5-minute, it looks terrible. But there's reasoning behind it.
What I want you boys to do is honestly just be on the charts for a
Cool.
couple hours together and just genuinely mark stuff out. You can FaceTime me, but just even you two, you can correct each other, you can mark each other out. You can rewatch this video because this is going to be on YouTube.
Oh,
Watch it. And also, Oliver has videos going over fair value gaps. So then you can be like, you guys hop on the charts together, trade for a few hours, mark out fair value gaps, and then go to our videos and be like, does this fair value gap match what they're saying in the video? So one thing I want you guys to also, this is the great thing about art, we just need to click. So let's look at this. So not only does this tell us the sessions, but you see these long lines. That is the previous session high. So this is the highest point that Asia session went. This is the lowest point Asia session went. So if we just, want to look at some stuff real quick, we're going to mark out this 5-minute fair value gap right here. That gets tapped into multiple times. But we have a new session starting. So New York is about to open. What do? We refill this fair value gap, and then our target. So we've been talking about entries and where to enter.
Yeah.
Our target is right here, London highs. So I wish we could go into replay mode, but none of this was here yet. So what we would have done is taken along. We go into this fair value gap. We respect it with this green candle. So you enter long right here. Does that make sense?
Yeah.
Just zoom in so you can see. So we enter this gap again, but we have strong buying power. So we enter at the end of this 5-minute right here. Where is our stops going to be? It's going to be at the bottom of the fair value gap. Where's our TP going to be? It's going to be at London highs. Correct.
Okay.
So we got the entries going good. TP's right there.
Bang.
And 1 to almost 4 RR. Beautiful trade. We had some drawdown. Oh, that's just because we were retesting. Bang. Straight to TP. You obviously could have taken it higher, but you don't need to. You got London highs right here. And on top of London highs for your draw, what do you have? An unfilled. This fair value gap has not been touched yet. Didn't get touched right here. Didn't get touched until we went up into it. So not only is your draw London highs, but you have a ginormous 5-minute, just so you can see exactly why that's there. 1, 2, 3. Never gets filled until our target. So you have fair value gap. We respect a fair value gap. You're targeting an unfilled fair value gap. You're targeting previous session highs, and it's New York market open. Beautiful, beautiful trade. So that's just putting 3 confluences together right there. And that's right. That is in the ICT toolbox. If you go up here, previous day high, previous day low, low resistance liquidity. We already talked about devil's marks, which is 0 wick right here. Doji we talked about. Time frames, different time frames. Right here is your indicator, ICT kill zones and pivots. That's just to mark out. Let me just change this to session mark out. So that marks out sessions. And then you have just take profit, which is TP. Liquidity sweep, which is if we go down and we fully take, previous day highs, that's a liquidity sweep. Draws on liquidity, which is previous day highs. So this has genuinely, if you use all these and you memorize them and you mark them all out and you understand them, you'll be making profits. You will 100%. All right, let's do this. Let's go to FX replay. I put that in the toolbox. Have you guys used this before?
No,
No.
that's it.
Oh, you haven't?
No.
Okay. What you can do is you can create the exact scenario as if it was a profit. Oh yeah, there's a free one. So there's a free one. But with the paid ones, what you can do is you can create a simulated prop firm to where it's like you have your account balance, what your target is, so 3,000, and then minimum trading days 2. So you can literally, whatever your prop firm's rules are, you can add to FX replay and it'll simulate.
Oh, that's
It'll
sick.
simulate a combine.
Oh, that's super sick.
So let's get you boys set up. Let's do a 50K account balance. Bang. All right, here you guys go. So let's just, if you want to mark stuff out, and then on top of that, you can buy and sell right here. What I want you guys to do is I want you to, right here, you can click play. As you're watching the chart move, mark out stuff. Once you see a trade, then you enter.
Okay.
And then to enter, you should go 10, whatever, sell, and then it'll enter you. And then you can do TP here, stop loss here, and then tell me your reasoning. So First, I want you guys to find a trade.
Well, I would mark some shit out real quick, like that fair value gap right there. Even those right there. That's correct. That's a correct.
Yep, that's
Plan.
correct. It's a banger. But something you want to pay attention to that I'm seeing, which we have not gone over yet, is new week opening gap. Now, this is treated as a fair value gap
Oh.
because there's no candle there. And what do? We tapped into it and went up. So my entry personally, what you want to see is market goes down, disrespects it, goes back into it, and now you take a sell. Because we make it an inverse fair value gap, we tap into the IFEG, and then we target down here. So let's see. Let's play it out.
Yeah.
Or nothing. This is just choppy as fuck. So one thing I will say why we're continuing to go up is because we technically already filled this. You see this?
Yeah.
And this week. We already filled it. It's a new week opening gap. We filled it, and we're just continuing to go up. So now, but what are we in right now? Is fair value gap.
Oh.
All right, you guys can go.
Well, I'm gonna play it real quick because it's touching on fair value gap. What were you talking about again when they intertwine? What's that called?
Breaker
A
block.
breaker. Okay, so that would be a breaker block right there. Wouldn't it not?
Where?
Right here.
Not yet, because there's the third candle. Good play. Bang, nice.
Oh,
Okay.
So now what do you want? You want to retap it to the top of this 5-minute fair value gap, which is into the breaker block. Let's mark that out real quick. And then, yep. And then where's the breaker block? Now mark out that other fair value gap.
And then the top's right up there.
Yeah.
And then you.
Yep.
Oh, you know.
Look at that. Yep, right there.
Sweet.
Okay, so now let's see. Do we tap into both of them? Bang, tapped
Boom.
into it. So now we need, what do we need? We need a displacement candle.
Yeah.
Got it.
You
So
want
go
that?
ahead. Inverse it. So now we wait. Now we have no trade.
See, is this a fair value gap right
Yeah, that is a fair
that's,
value gap.
that's
here?
Yo, this makes more sense because I mean, yeah, you can have those fair value gaps, but if they don't reach it, you're not risking anything because you have the fucking confirmations. That's crazy.
Let's go,
What?
boys.
That is wicked.
I'm hyped.
I'm happy I asked about the double box because if I didn't, I feel like if I
You
didn't
would've-
ask about that, I would have taken it down.
You would have taken a tour.
A
Yeah.
crazy trade, and I
you
would
would be
have
like, oh, this shit doesn't work.
yeah.
Yeah.
No, you. Oh, that's wicked.
All right, so we just tap into this. So
There we
we're
go.
going to inverse it, or we're going to have a displacement candle up. Because if we have one up, then we could see potential for longs. All we need is a confluence to target.
Next candle?
Yep.
Yep.
Now we inverse that one. So we are just chopping around. So now, no longer a trade. Keep going. Okay, now we have another fair value gap. Mark that one out. Just move that purple box. Just move it down because that wasn't matter anymore. Yeah, right there.
Right there.
Perfect. Now play. Bang.
Boom.
Alright.
Okay.
Do we have a displacement candle? One more. Bang. All right, now we enter. So now click. I would do sell. Just real quick. All right, so now let's figure out TP and stop loss. So TP you want above the fair value gap. So sorry, stop loss. Stop loss above fair value gap. Just put that right there. So you're risking 200.
Okay.
And now TP zoom out. So now if you want to go
You
for
get that session low right there, right?
so this is a session low.
And that other.
This is one, and we have this blue one all the way down there, and we have new week opening gap right here. So those are the confluences I see. You don't want to go for that. I would go for this right here.
That's the good one.
This session low, because you don't
Would
need.
you go for the other one if you didn't want the rips,
I mean,
or if
person.
you didn't?
Which one? This one where we're at.
That one where we're at right now. Yeah.
I wouldn't because the RR. Look, you're risking
Risking
200
for
to make
one.
100. So you can't do that.
Okay.
I personally am going after this down here, but that's also a ways away. So I would just go for this. You have like a 1 to 1.5 RR, or you could even go for the new week opening gap, which is right there.
Okay.
So
That's pretty solid trade.
we'll see. Who knows? Maybe it sweeps that session and then goes straight up, and then we get cooked. We retapped into it.
And we're good.
Stop loss. Yeah.
Oh, yep, got stopped. An inverse in fair value gaps.
Oh,
boys. I feel like we learned a lot. I mean, it's been
Yeah,
a
dude.
2-hour session, but
Dude,
I think I've learned
I just
more right now than I've done losing.
oh,
I'm not gonna lie.
you got And that's the thing, bro. You can put in as much time as possible towards something, but if you got no blueprint, you don't know. Like, if you're trying to build a boat and you've never seen a boat before, how are you gonna build it? So
Let's start sinking.
that's why you need guidance. You gotta work hard, but you also need guidance. Because you can spend 12 hours on the charts, but you still need a bit of guidance.
Yo, that is like my mind feels like crazy.
I'm a double bake.
Dinner after episode 1.
I put it inside.
Real quick, boys, how was the lesson? How was the lesson?
Dude, that shit
Too
is
crazy.
fucking
I
insane.
learned more in 2 hours than I have 3 months trading.
Really?
I'm gonna lie, bro. Yes.
Let's go, boys.
Straight up.
Let's get it. Next series coming up soon.
Dude, can't wait.
Staring at me saying, wow, unforgettable.